when you are panic selling, there's somebody on the other end that's willing to buy your losses. That is the person you eventually want to be. What is going on, crypto peeps? Welcome back to the Traveling Crypto. Last night, US time, we saw a big drop in the market. We are now at 202 bill market cap. We did drop a little bit below this to, I think, around 200. And, you'll see this reflected in the cryptocurrency prices. A lot of the top cryptos are down double-digit percentages over the last 24 hours, some a little shy of that. So we are down all across the board, which is fine for a couple of reasons. One, we set stop limits in order to book profits on some of the short-term plays that we had. So I sent out trade alerts. If you want access to the trade alerts, link is in the description. I don't mind sharing these because these are expired and old by now. But NAS, GTO, NPXS, we were up double-digit percentages on all of these, setting stop limits in order to protect our profits. Now, there were a few long-term plays, but the long-term plays, I only scaled in for a certain percentage of my portfolio. If and when the market took a dive again, and it did last night, I am planning on scaling in some more. When the market is red, I'm always a long-term buyer, whether we're talking about crypto or the stock market or whatever. Now, let me explain this real quick. I'll put this in a way that hopefully simplifies it for you, okay? Of why, I know it's counterintuitive, but why you want to be a market buyer when the market is red. So when the market starts dipping and everybody is panic selling, right? You're panic selling because the market is dipping and you don't want your portfolio to bleed out some more. Think of that person. Who is that person buying on the other end? See, you get into this mode, you think because you're on Binance or you're on your exchange and you're clicking sell, you aren't really thinking of there being another person or another trader on the other end of that trade actually buying what you are panic selling, right? You probably are thinking subconsciously that you're selling to the exchange, even though you know that's not true. But because you are on the exchange and you're clicking buy and sell, you're transacting with the exchange, and you're probably subconsciously thinking that you are buying and selling with the exchange. But what you're actually doing is buying and selling to other buyers and sellers, to other sellers and buyers. So when you are panic selling, there's somebody on the other end that's willing to buy your losses. That is the person you eventually want to be. You want to train yourself as a trader to be that person, the person that's buying when everybody is panic selling. Now, of course, I'm not begrudging anybody for selling in order to protect their portfolios or stop the bleeding or whatever. But think of when you actually bought your asset. You want to be the one buying during the crashes. So that is the second reason why I don't mind when shit like this happens, because the first reason, I set up stop limits to either protect my gains that I've made so far or mitigate my losses. And two, because I know that I want to buy for the long term at these prices. That is very different from, say, buying at the high and just watching your portfolio bleed out 80% before selling. Again, who are you selling to at that moment? That is the person that you want to be. All right, so what I wanted to do today was take a look at where the market is currently and where the market was exactly a year ago. There is a historical snapshot feature on CoinMarketCap, which is pretty awesome. You just go to tools and you go to historical snapshots, and then you could pick the date range. So the week October 15, 2017, almost exactly a year ago, you can take a look at what the prices are today versus then, and take a look at which cryptocurrencies were ranked at what spot. Now, the interesting thing right off the bat is you'll see that back a year ago, there were 1,097 cryptocurrencies. And today, you'll see here, there's 2,062. So we almost have double the number of cryptocurrencies, but the market cap doesn't reflect that increase, right? The market cap is 202 billion. And I checked the market cap on this chart during this week, and it was at 169 billion. So the market cap increased by about 20%, while the number of cryptocurrencies doubled. If you take a look at the prices of the cryptos in the top 10, you'll see some very different results. Some are trading higher, some are trading lower. So Bitcoin is at 57.29 a year ago, and today we're seeing it at around 6,300. That's what, a 10% gain, or we're trading at 10% above where we were last year. However, Ethereum is at around $200. Same time last year it was 336, a far cry from where we thought Ethereum would be today, right? We were even talking about the flippening, if you remember that. XRP is at 41 cents. A year ago it was at 25 cents. Bitcoin Cash was at 318. It is currently at 450. And then you'll see Litecoin, it dropped a few spots as well, but it was at $52, and last year it was at $66. Now here's the fundamental difference. You're probably saying, "Oh wow, that's great news. We're actually not that far out from last year." But the difference is we are in a major downtrend, and last year we were in a major uptrend, right? So if you take a look at the charts, you'll see that October last year, we were part of this rally here. And yes, the prices have regressed back to the mean, if you will, but this is coming off of a major downtrend, right? You can even see this reflected in the momentum oscillators. Here's the uptrend, and now we are even below zero on the MACD on the Coinbase or the BTC 1 week chart. All right, I just wanted to go over that historical glimpse since we're nearing the end of the year, or Q4 of 2018, and it's really interesting to see the contrast between Q4 this year and Q4 last year. Looking at BTC, it's playing out exactly as we thought. You'll see this bear flag here, or ascending wedge, whatever you want to call it. Last video, I called this a bear flag, and somebody commented and said, "No, I don't think that's a bear flag. The channel's too long for it to be a bear flag." I mean, whether it's a bear flag or an ascending wedge, shut the fuck up. It's the same result, right? They're both bearish patterns going up against the resistance of this descending triangle. So you'll see this bear flag or ascending wedge pegged up against the resistance of this descending triangle, and it's almost like it hit a wall, right? Like when marathon runners hit that wall and just can't go anymore. That's what it felt like, and we saw the sharp drop last night. There's also another bearish pattern in this head and shoulders here. On the 1-day chart, you'll see the left shoulder, head, and right shoulder, right? This is also a bearish pattern. So we have the head and shoulders, the ascending wedge, the descending triangle. They're all bearish patterns. Not to mention the volume is not that great, not that impressive at all. Actually, Bitcoin was set up to take a dive, a month or so ago, and it's actually sustained really well. So you do have to give it props for that. Now, the bottom, obviously, is this 5,800. If we break 5,800, we could see disaster market wide, and we could see the prices of some of these alts. Here's Ethereum, here's Litecoin. We'll go over these in a second, but you could see the prices of those find new bottoms for 2018. The market cap could also dwindle to, around where we were same time last year, which was at around 169 billion. Anyway, I'm not making any plays on Bitcoin at the moment. It's not worth it. Again, we're nearing the apex of this triangle, and we want to see what Bitcoin is going to do. It's not really worth it for me to try and engage Bitcoin in any sort of trading, because there will be most likely a major move within the net, in the upcoming short term, since we're nearing the apex of this triangle. Looking at Ethereum, you'll see that Ethereum is nearing the zero on the fib. This is based on the swing high and swing low of the recent price action. And again, Ethereum is one of those that's trading below where it was last year. Now, you could justify an entry on Ethereum, or at least start scaling in on Ethereum at current price levels. But I'm really holding on to see what Bitcoin is going to do. Litecoin is currently trading sideways all the way, going back to August, really. And it's actually been a pretty boring cryptocurrency. The one crypto that's really impressed me lately is QKC. And you'll see that since August, QKC has been on a pretty steady uptrend. I actually don't know of another chart that looks like this. It's been a monster in the second half of 2018. And even with yesterday's sharp drop, we fell about 6%, and now we're bouncing off the 0.786 fib level. I'm going to continue to scale into QKC over the long term. Again, if you want access to the trade alerts, link is in the description. One other thing I wanted to cover before closing out is the price difference, the peculiar price difference between USDT and USD. If you take a look at Bitcoin and USD, you'll see that it is currently priced at 61.97. If you take a look at the price in USDT, it's almost exactly $100 more than that at 62.91. Now, this could be because of some news that came out that said that Bitfinex suspends fiat deposits, and that could have some impact on the value in USD versus USDT. But, I mean, there's definitely an arbitrage opportunity here where you can sell or buy BTC at 6,200 USD, sell at 6,300 USD. However, in order for it to be worth it, you would have to engage in a large sum of money, and also you'd have to, buy large amounts of tether. And when I see price differences like this that sustain over a long time and not just for, a few minutes or so, it does kind of worry me, not to spread any FUD about Tether, but it does worry me as to why that is going on, right? So if you were going to take advantage of this arbitrage here, you would make $100 for every $6,200 that you put in, obviously not counting the fees of exchanging back and forth. But you would need $6,200 to make $100 on this arbitrage opportunity. And again, you would also need to engage in large amounts of tether in order for you to gain those profits, which I'm not willing to do. But it is an interesting arbitrage opportunity, buying at 6,200, selling at 6,300 in USDT, making $100 for every 6,200 that you put in. Anyway, that is it for this video. Again, if you want access to those trade alerts, link is in the description. If you need help with your technical analysis and you want one-on-one coaching, I have a couple of slots available. Same link in the description. Subscribe to the channel, hit that notification bell, comment if you like. Stay safe out there. Peace.